Hi everyone, welcome to today's session. I almost said Forex session, but it's not. It's the day trading session. We've done two already, so I've just got Forex on the brain at the moment. But before we start, can I just draw your attention to the disclaimer that I know you can see on the screen. As you know, trading any market can be very risky, and so please don't ever think of using money that you cannot afford to lose. So here we are. This is myself, this is David. We are here. Are we ready to go? Brilliant. David's nodding, and we're going to do something slightly different today. Let me just get rid of this screen here, because I had an email from someone I know who's bought the books and has come along to one of these sessions. I think, if you recall, I mentioned if you had any aspect of trading that, from VPA perspective, that you wanted us to cover or market, if you drop me an email, then I'm happily, David and I could make it one of the topics of the webinar. And I'm just having a look through, and I think he is in the room. Yeah, I think he's here. Okay, he is there. Right, fine, thank you. Basically, the email I got wanted to trade oil and sent me a lot of screenshots with different time frames and the different kind of, there are lots of volume indicators in the market that you can use to help you with make trading decisions. So in answer to the email that was sent to me, these are the things that I would suggest you do if VPA, volume price analysis, you're very new to it. So it's really a question of how do you start and what are the time frames that you should be looking at when you first start. And my suggestion, I know David will back me up on this one, is really to start on a very simple basis. I know my charts are loaded up with our quantum indicators, and I've kept the indicators on the chart that are particular to volume. First of all, obviously we've got the volume histogram down here. This is standard that comes with NinjaTrader. We've obviously got candlesticks. We use candlesticks and not bars. And what I've also put on is the volume point of control indicator, which is really an enhanced version of the indicator, which is the volume price, which does actually come as standard with NinjaTrader and on some other platforms as well. We've based the volume point of control indicator on volume at price, and we've enhanced it in the sense that we have what we call the point of control here based on volume. This is this yellow line here, because it is the fulcrum of the market. It represents the price on the chart around which the buyers and sellers, if you like, there has been a general consensus of opinion. So in other words, there's no firm direction in one way or another, because as part of volume price analysis, we also have to look at support and resistance and congestion phases, the different phases of price action. And what the VPOC does, it highlights immediately for us which is the area on the chart which has the deepest congestion in terms of volume, not just based on price. Then we come to the actual time frames. Now, I wasn't sure from the email because there were a lot of time frames included in the charts. There was a daily, a 4-hour, an hour, etc. What time scale was looking to be traded. And this is another decision as a trader you have to make. You have to kind of focus and restrict yourself to a certain number of time frames. You've got to use more than one chart. So 2 but 3 preferably for taking trading decisions. So what I've set up here, I've set up the 3-minute. I'm not using a non-time-based chart. I have a Renko over here, but I'm sticking to time-based. I've got a 3-minute, I've got a 10-minute, I've got a 30-minute, which is, if you like, my 3 charts that I would use to make an intraday trading decision, because I assume the person who wrote to me is looking to take intraday trades, is not looking to to hold trades overnight. But if that is not the case, then what you do is you simply put together the time frames to reflect the time that you think you are going to stay in the market. If you're looking to stay overnight, well, the 3-minute chart isn't really, it's awfully interesting, but it's not really going to give you the information that you need. You are going to have to migrate to the slower time frames. Now, I've also put the daily time frame up, and the daily time frame is important because it gives us context. It gives us the background as to what is going on in the faster time frames. And what is interesting with oil is that having had a really quite an impressive run up, as you can see here, in fact, let me just narrow that down a bit. Here we are. If we go right back, it was down at had support at 52 back in February, not that long ago, and it has been in an uptrend, and it actually sort of topped out here in just over 66.50, David, just below the $67 region, from which it has since subsequently had a pullback. But let me just expand that again. Really, that pullback, that sort of reversal, if you like, from around 66.50 in the last sort of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trading sessions, it's actually in congestion. And we know it's congestion because it's moving sideways. We can see the candles here. We know what the range of the candle is. We've got wicks to the top, wicks to the bottom, but essentially it has been between 60 spot 50, 60. Is that about $3 range, David? Roughly about a $3 range. We also know it's in congestion. It's because the VPOC is now here. This is the volume point of control. Now that's really important because what it tells us is when a market is in this in a congestion, in a range, if you're trying to take trades on an intraday basis, it is perfectly feasible to do so. But because it doesn't have a firm direction in one way or another, it can be a little bit more tricky, and also you're not going to be in those trades very long. I mean, this was a very wide-ranging day, but look, you've got a wick to the top, a wick to the bottom, relatively narrow candle. It's what in trading parlance is good two-way price action. But whether there was volatility in that candle, how long did any move to the upside, how long did that hold for? How long before there was a reversal? That is what a congestion period is telling you in the faster time frame. Now, what is interesting, over the last 2 sessions, we've actually found a base at just over 60 spot 50, 60 spot 60. We've actually had 2 days, 2 up days what am I trying to say? 2 days following 2 consecutive, I'd lost the name, 2 consecutive updates ran straight into the volume point of control, from where you can see it actually fell back on each previous occasion. But today it's been a really positive update. So what oil is trying to do, if you like, it is actually trying to make a break in one direction or another, and that is what we're seeing at the moment. So if you like, the bias for oil based on the daily chart is to the upside. Now, if we go down to our 3 charts that we look at, we look at the 30-minute chart. The upside for oil, this is here. This is the ton of volume that actually came in, and we've got the volume point of control here on the 30-minute chart at about 61.20, 61.25, and that has actually precipitated the move that we see in progress at the moment. The volume down here is very, very low. That is because this is Globex, and we would expect this volume to be much lower than when the physical market is open, and then you have a burst of volume coming in at the open. So from a volume price analysis perspective, volume has to be read in context and also relative to the session that is being traded. Okay, so that is when we had the main buying for the present move coming up. Then it went into a sideways sort of drift sideways, but with an upward bias. Why? We have another indicator here, which is our pivot indicator. This was a little congestion period here, but each one is slightly higher than the previous one. The support and resistance indicator is coming into play. The price is being maintained, if you like. Now, just before we came on air, this candle here was very much a doji candle. We've got a kind of a doji candle here. This was looking to be another doji candle. So in a slower time frame, when you see a candle being formed that is a doji and you're trading on a faster time frame, again, this is telling you you are going to see two-way price action, which means that yes, there is possibly going to be a bias to the upside, but boy, oh boy, it is going to make life difficult for you. So get back to the 3-minute chart here. Again, we have the volume point of control. We have the price trying to move away from there. Lots of wicks to the bottom of the candle. The bias generally is to the upside. So that's the first sort of level of analysis that you have to do. You have to frame the price action, what is happening on the daily chart, and then look at the price action on the 3 charts that you hopefully the 3 charts that you're analyzing, and then looking to take a trade on. And then you move down to look at the individual relationship between the candles and the volume to see whether because what you're looking for all the time is you're looking to spot anomalies. VPA really comes down to this, and that is what it helps you do is anticipate where the price is going next, because it will confirm for you whether the price action that you are seeing on the chart is genuine or not. So if it does nothing else, just look for the anomalies and you will see anomalies. The wicks will help you, the spread of the candle will help you, and I'm going to pass over to David because his NinjaTrader workspace is a bit prettier than mine and a little bit clearer to see, and he will talk you through precisely those kinds of anomalies that you should be looking for that will help you give you the confidence first of not only to get into a trade, but stay in the trade and then help you to come out of the trade. Is there anything else you want to say, David, to that? And then while David is doing that, I will then, I'm going to look at the YM because I think indices have picked up today because of, oh, I don't know why they picked up, because it's probably because they've had so many down days, it's time to have an update. No, seriously, no. I think it's because, you know, they've decided that maybe all these threats about tariff wars and what have you, that's all they are, threats and everything. So, the sun's going to come out very soon. Right, so can I pass over to you, David? Is that okay? Are you going to be using the same time charts as me, or are you going to be using the... I think David's actually going to go slightly faster because, and I know you say, oh my goodness, should I be frightened of the fast charts, especially when you're learning? And the answer, the short answer is no, because A, the price action develops very quickly and it will just, you know, you can see the volume and the price action and you'll be able to pick out, you know, very quickly what those anomalies are. So just to recap, with volume price analysis, as I said, there are lots and lots of different volume indicators available on your platform. But when you're first starting, learn the candles, just use the histogram, the volume at the bottom here, and learn to read them with the candles. We have added our own volume point of control because it's an enhanced version of the volume at price. I know we've got some other little indicators as well to help us. That's fine, but if you want to use volume at price, fine, that's up to you, but then you have to sort of manually try and remember where the point of control is on the chart. Restrict your time frames. Have the daily for overall context, and we've taken it one step further here, and we're looking at the Canadian dollar, because if the Canadian dollar is rising, then you tend to find that oil is rising as well, because there's a close relationship between oil and the Canadian dollar. And stick to 3 time frames for your actual trading. I said I've got 3, 10, and 30. 30 is sort of my benchmark chart. Understand congestion, understand the structure of the chart. Where are you? Is it in congestion? Is it actually in a trend? because the VPA signals will be different in the different types of market condition. Is that all right, David? Right, I'm going to pass over to David, and he'll walk you through his charts as well.
Thanks, darling, and should be coming up any minute now. You should be seeing my screen. Ninja 8, you've got 6 time frames. Top line, I've got 15-second, very quick. Drop this down to 2 minute, and this one is 5 minute, and down at the bottom I've got 30 minute. In the middle we've got the Renko running, and finally over to the daily, which is the same as Anna's down in the bottom right. I've also got oil on the tick workspace as well. Just hop over to that one, which is this one. So I'll flick these over. Normally these are on indices, but I've got this on oil as well. And this is just picking up the tick speeds for the 3 time frames. I've got a 1 minute, I've got a 3 minute, and I've got a 5 minute here. And you can see the tick settings. I've actually picked these off as the ones that change less frequently on this indicator. This is the tick speedometer indicator. So I've got 2584 up on this one. I've got 1597 tick on this one and 377 tick on this one. Exactly the same principle in terms of using multiple charts rather than time frames. These are tick charts, so they're non-time based charts. They show momentum. The indicators work in exactly the same way. You can see here on the trend monitor, I've got the Renko in the middle here as well, running on a 1 minute chart there. So we've got 13 in terms of the cents per barrel. And you can see here the trend monitor, bright blue pretty much across the piece. So it's just giving us a heads up that we are in bullish territory at the moment. And over on the left-hand side, we're also able to blend a VPA-based approach. We've got the volume here, so we can use the VPA analysis over here on the left-hand side, but actually trade off the tick charts on the right-hand side. So we have the best of both worlds, if you like. But let's go back to the time-based charts for a moment, just to keep this little more simple. There we go. Just drop that out of the way. Just while that's oscillating around a period of congestion, I will talk you through as it comes in on the 15-second, the price action. But just to add a couple of points to what Anna was saying about trading a specific commodity, there's absolutely nothing wrong with it. The principles of VPA apply. In many ways, it doesn't really matter what's at the top of the chart because VPA applies universally, whether it's a stock, a commodity, an index, futures, it makes no difference. Cash markets, they all work the same. All I would say in trading one particular commodity is if you're going to do that, absolutely all well and good. Get to know it really well. Oil, you have to understand the fundamentals. You have to understand the politics. You could get trapped with geopolitical events. They happen all the time. But the issue that you'll probably face more than any other if you decide to become a specific commodity trader is, and that is your bag, then you have to accept the fact that there will be days when it's doing nothing, and therefore you will suffer from boredom, and during those phases of price action you may well be tempted to go off and trade something else which you don't normally trade. That's the downside of becoming, if you like, an expert in one market. Absolutely nothing wrong with it. A lot of traders do that, and that's all they focus on is one market. In the Forex world, they might only pick 2 or 3 pairs. In the commodities market, they might just be oil traders or they might just be gold traders. Absolutely fine. But that's the issue you will have to deal with at some point, because these markets don't always move terrifically during the day. Sometimes they do, sometimes they don't. It's the same as being an index trader. If you accept the fact you're an index trader, you may specialize on one particular index. You may be an NQ trader or an YM or an ES. But if the indices are not moving and some days they don't, that's a fact of life you have to accept. This is the 15-second, and if you're relatively new to VPA, I would urge you to get a fast chart, something maybe a little bit slower than this, maybe a 1 minute chart if you're on MT4 or MT5. And that's another aspect of trading commodities. If you are a novice, I would suggest that perhaps you start with an MT5 account, for example, where you'll have access to all these commodities, the indices, all the commodities, and even some stocks there now. But you won't have to have the brokerage details or indeed the margin requirements for trading full contract sizes, real futures contracts. So it's a lot less onerous financially to approach it that way. So I would urge you to have a look at that if you are relatively new and you've not traded futures, particularly in the past. Not much going on there, as you can see at the moment. Let's just see where we are on the 2-minute. Okay, we're trading in congestion there. Just looking at the volume profiles down here. Okay, just setting some levels to try and give us a clue as to where we might think about getting in once we're out and away from this congestion phase. Pivot to the upside here. In terms of the floor, it's somewhere, let me just move the chat box out of the way, there we go. The floor is around 63 and the ceiling is around 63.15 in terms of the 2-minute chart. Just have a quick look at the 5-minute. Pop that up full size for you, there we go. Bit of weakness early on, you saw it here, wicks here to the upper body and to the lower body there, a bit of indecision, bit of weakness there, more weakness here. This is not a particularly strong move for the time being. It's grinding its way higher. We've got an increase in volume on those last 2 candles, so you know there is some upside momentum here. Trend monitors blue supporting that move for the time being. We're starting to come up to some lower volume in terms of the volume point of control. So really trying to break away from this great area of volume here, which is holding things up for the time being. Just pull the 15-second up again. Those last 2 candles, down candle, decent volume under that one, some decent selling, but then it falls away on the next one. So there's no follow through on that at the moment. We've also got a minor platform of support in here at 63.08, which is kind of holding it up for the time being. Got some decent resistance in at 12 and 13, nothing much for 14 and 15. So it's much lighter up towards that area if we can get through it. Down onto the 30, which seems like extremely slow, but nevertheless it just gives you a different perspective on where we're trading at the moment, what is going on. We just have to wait and be patient and define those levels where we expect to see a move, and once we've broken through a particular level, then is it an opportunity to take a position in the market? And of course the other thing you'll be paying close attention to right now if you're trading commodities is what is going on in terms of the dollar on the dollar index. Yesterday we had a big draw, I think, no, sorry, a big build in inventories. That's the other aspect on Wednesdays. Paying attention to the weekly oil inventories, understanding the data. You've got the politics of OPEC, which is constant and ongoing. You've got supply issues. You've got the management of the market by OPEC. You've got all sorts of factors in the politics, particularly with regard to Iran. It's a complex market, not just a technical market. See what the volume's like on this candle. Should be decent. Now we've got volatility coming in. You can see the volatility trigger that's come in. We've got a decent amount of volume, strong volume on that last one. But we've got the volatility triggered. So what we're looking for now is a possible reversal back in the spread of that candle. Why? Because the market makers, the big operators, are playing in the market. They've racked the market up very quickly. A lot of traders will have jumped into that position on the expectation of going higher. It may well do, but it may also consolidate. That's what the volatility trigger tells you. There's volatility around, and so it's a warning flag. Just see what the volume's like on the next one. We're still trading in the range of that candle. It's what we expect to see. A lot of volume under that last one, not looking terribly strong. See if it does a repeat of that with some more volume coming in. Okay, we've got failure there, we've got failure here, so it got to 20, back to 17. Decent volume here. Look at the volume profiles under this lot as opposed to what's been going on over here. Let's have a look at this price action on a slightly slower time frame. Let's have a look at the 1 minute, see what it looks like there. Okay, it's not too bad. We've got a nice widespread up candle. Decent volume under there, so that's all in agreement. Doesn't look too scary. And if we get through 20, then we're into low volume territory in terms of the volume point of control, and we're looking to push higher in that case. See where we are on the volatility. Still just about climbing our way out of it. Look at the volume under here. It's fallen away dramatically to the upside. Very low. There's this big surge in volume over those 4 or 5 candles. Now it's fallen away back to much lower levels. Let's go down to the very slow time frame of 5 minute. Similar sort of picture once we're pushing up into these low volume nodes here. We're looking to clear those and through 20 and on up to the next level, maybe 25. Look at the Renko also helping to just define and smooth out some of this choppy price action. The Renko's are great. It's another non-time based chart, exactly like the tick charts I was showing you earlier. It's just another nice way to smooth out the choppy price action, helps to keep you in, or you can use it as an entry or indeed an exit. Once it starts to consolidate, maybe reverse. You can see the indicators working exactly the same way. Got the trend monitor down at the bottom, just slacken that off a bit. Trend dots here will always transition first. They'll flatten, they'll go into transitional colors of gray or into the red if it's a reversal, but they'll change very close to the market because that's what they're designed to do. The trend monitor takes a more considered view of price action. It's there to help to keep you in through these phases of congestion, which are the most damaging when you're trying to hold a position in the market and it's maybe a little bit sluggish. And you get the pullbacks and reversals, and those are the points when emotion kicks in and you want to exit the market because you've got some profit maybe and you want to get out. And that's where the trend monitor really pays dividends. It helps to keep you in. Okay, we've had the congestion phase. Now we look like we're pushing on up to the next level. Again, very high. That's the highest volume so far under that candle. Slightly worrying. Should have gone a little bit higher than that, I would suggest. Nevertheless, nice to see volume underneath the candle itself. Now we're starting to move higher again. Really nice move developing. We're up to 24 now. That's where we are on the daily. What have we got on the daily? Well, we've got quite a lot of volume here, so you know it's just got to push through all that. But we're down on at the cold face here. We're now up to 26, which is nice, developing nicely. Nice little rising volume here on the 2 minute, which is nice to see. A little bit of congestion on that one in terms of volume price, but nevertheless the last candle, nice up spread, no wicks of any significance there to worry about, some decent volume. So we've got rising volume, rising price, which is always a nice confirming for us. So we're up to 27 now, moving to 28. All good stuff. You can see the trend monitor here is now bright blue across the piece, supporting everything, pushing us up higher. Let's move that up for you. There we go. Now we're really taking off. We're up to 39.40. Okay, now we've got volatility come in on the slower time frames of the 2 minute. We're up to 43.44, and at this point you might have a decision to make because you might be fearful of a pullback into this congestion phase should it develop. Given you've maybe taken a lump of profit out of this market, then it might not be a bad time to actually close what you've got and sit tight and wait for this congestion to dissipate through the market. If this candle closes anywhere off the highs, then it will consolidate almost certainly and move into a congestion phase. Not guaranteed, but that's the expectation. When this happens, if I was looking at this now and I had a position in the market, I'd be closing, or I'd be partially closing. If I was scaling out, in other words, I'd gone in with a 3, 4, or 5 contracts, and at this point I'm looking to take some of that profit off the table. I don't have to close the whole position. I can just take a couple of contracts off, maybe 1 or 2, and leave 1 to run, or if I've got 3 or 4, maybe take 3 off and look to leave the other one to run to conclusion. There's so many different ways to trade. That's scaling out, or alternatively scaling in, where you're basically building a position in the market. So you've got a position that's in strength and you decide to add further contracts to it. But there we are, that's the volatility, and if we scale right over onto the 15-second chart, that's what we're seeing there too. We've got two volatility candles, one after the other, ton of volume coming in here. Now we're moving sideways. This is what we expect to see. No great surprise. Pivot high, pivot low, pivot high, pivot low. We're in congestion. Now we've got to wait and be patient. If we're holding that position and haven't closed out, then that's the emotional response that the big operators want. They want you to sweat. They want to really put some fear in there because they want you to close out through fear and not hold for future gains. See what's going on the 5-minute. What's interesting, the 5-minute, we haven't got volatility on the 5-minute, but we have on 2. So we know for a fact there is volatility around. It just hasn't appeared on this particular time frame. But if we see a pause on 5 and we're trading on a 5-minute chart, then we know the reason why, because we've got volatility on 2 and we've got volatility on 15-second. We've got a ton of it on 15-second. Nothing on 30. Renko's still nicely blue. Everything's still holding up there. Just go to the tick charts for a moment. There we go. Exactly the same principles at work on the tick charts, just running at different speeds. Got 377 on this one. I've got 1597 here, and that one's dropped to 1597. So the 5-minute time frame has actually slowed up quite considerably. You can actually see it here. What the tick speedometer does is it basically gives you a traffic-like system of when there is activity and participation and when that has fallen away. And when you're trading in red, it flags it up as slow. You can see it here, slow there. We're slow down here. The normal speed of participation, or the normal participation rates, in other words, are when we're trading either in orange, or when we get bursts of activity, we get the green coming in. So when you get these high volume spikes, that's when the big volume's coming into the market. That is participation. And when you get these red regions, that's when the market is very sluggish. The big operators are not participating there. You get congestion. Everything's a bit lackluster, and so on and so forth.
There's a volatility candle on the 10-minute chart.
Okay, Anna says there's a volatility on 10 now, on the 10-minute time frame. Just go back to our time frame charts. There we go. And this is the emotional pressure that's now being applied. You've had this rush up in price action. Maybe some traders were a bit nervous down here, but waited for this to happen. As soon as they saw this happening, they've jumped in. Now what's happening? Now they're being crushed. The emotion is being squeezed, and squeezed heavily. They've come off the highs. Maybe they've got in up at the high here somewhere, hoping for another, really rapid move up through 50 and 60. Now they're really under pressure. The market's reversing against them quite strongly. Their losses will be building, and they'll be regretting the decision they made to jump into the market when the market spiked. It's very simple, really. And let's face it, if you were in a position to do that, you'd do it as well, because it's a great money-making maneuver. And you can see the ton of volume under here, so it's pretty clear the big operators are in there, and they always are when volatility is being triggered in the market. Trend monitor, you can see, has transitioned on 15-second. We've gone through the full complement there. We've gone from bright blue, just pop that up full size for you, bright blue, dark blue, into dark red. Excuse me, just switch off a minute. Sorry, I had a frog in my throat. Right the way through, just click that off, go away. There we are. Gone through the full transitional set there, if you like, of dark blue, dark red, and back out the other side into bright red and into a bullish move lower. So if you're an out-and-out scalping trader on this, you'd now be looking to short. But if you're a slightly longer term trader, and I use the words in a relative sense, then over on 5, what we're seeing is a massive spike in volume. So there is certainly a degree of selling in that particular candle, because we've got a well-formed wick to the upper body. And therefore what we're expecting to see is certainly some congestion, because if there were no selling in this particular phase of price action, then given the injection of volume that's gone in there, this candle should be well through 50 at any rate, somewhere up here. a nice widespread big candle with a ton of volume under it. So we know for a fact there's some selling gone on in here. There has to be. Otherwise, this candle would have closed wide and up, and it hasn't. It's closed halfway back down, well off the highs of that particular session. So your analysis will tell you, even if you're holding this position long, your analysis will tell you to expect at the very least some congestion, possibly a pullback, because there has to be selling in that particular volume bar. And that's another reason that volume price analysis is so powerful, is because it forces your brain out of that emotional response of, oh my goodness, what do I do now? Panic, panic, get out, don't know what to do. It forces you into an analytical mode, which is much more cool and calculating than your emotional brain, which is just telling you to close out, take what profit you've got, get out the market, fear and uncertainty and doubt and everything else wrapped up with that. Still trading in the range of the volatility candle, which is what we expect. And if you're not in this trade, or maybe you've seen it and you're not quite sure whether to get in, and it's a question of deciding at what point you want to get in now, well, to the upside, you're looking at well beyond 63.50 now, so wait for that price action to clear this particular candle and for the market to settle again. What are we seeing right now? Bit of weakness here, weakness on that one, high volume, market's trying to rally, push up, not really getting very far. Volume on that last candle's okay, rallied, narrow, reasonably widespread, it's okay, you know, it's in agreement, it's not in disagreement. Trend monitor, as you see, is still blue, still holding in for the longer term bullish trend, hasn't transitioned yet. Nor indeed has it on the 2-minute time frame. Down onto 30. Haven't got the volume closed off yet because I don't have it switched on Ninja until the bar closes. So you can have it building in real time, but this one will close off in 5 minutes. So you'll get a perspective on the much slower time frame of 30 minutes and how that price action relates to the volume associated with it.
It's massive.
Is it?
I've got it.
Anna's got it running live on hers. She says big volume.
You can't have it running on yours.
No, I have too much data coming in. Okay. Interesting little move here. Again, this pure VPA. I mean, look at this rally here. If you're trading this as a scalping trader and you've got these 3 candles rising and you've got this volume down here, which is almost a pinprick, then clearly, at the very least, you're going to see a pause and a possible reversal off that. You know, that is not the sign of strength. That's a sign of weakness. These tiny little volume bars here with this very narrow spread price action. And down it comes. And down it comes again. Very minor resistance there. Support rather, I beg your pardon. This little red dash line here. We've got a very minor level of potential support here and another one here. So really nothing of any significance to provide support to a move to the downside other than this big chunk here of potential support down at 63.19, which is some way away. But I go back to the point I made earlier on, whether this is oil or whether it's gold or whether it's a soft commodity or whether it's an index or whether it's a stock or whether it's a currency pair or a currency future makes absolutely no difference. The only difference is what the contract value is worth and an understanding, obviously, of that particular instrument and that particular market in the context of the technicals and the fundamentals and how that relates. But other than that, from a pure principle of trading a chart using VPA and the indicators, it makes absolutely no difference whatsoever, and it doesn't matter in terms of time frame either. which I hope you accept, having seen the 15-second and right the way through to the daily. It makes no difference, which is the beauty of the methodology. And this is what congestion phases do. This is why they so often follow the volatility trigger. It's the emotional squeeze that is now being applied to the massive traders who have sat in here, jumped on this move, and are now being squeezed. They don't know whether they're going to make some money. They're probably all hoping that the trade moves through 63.50 and above, but for the time being, it's not. It's just sat in congestion, and the longer it sits here, we're on a 2-minute chart, so this is only 10 minutes. But if this carries on for 20 or 30 minutes, that's a long time to be sat there on a big contract. It's the emotional squeeze coming on. It doesn't necessarily mean that you will not make money in the position, but what it does do is it just absolutely squeezes your emotion to death. And it wears you out. So, as I said at the time, if you're scaling out and you've got positions in the market, take some off, bank that profit, and then you can sit here comfortably and maybe leave the last one to run. If you're a scaling in trader, maybe you've only got one contract on, then in that case I would suggest, I can't remember what the phrase is. Valor is the can't remember the phrase, but you know what I mean. Yes. What is it? Caution is a great part. It's something to do with that. I can't remember exactly, but I'm sure you've heard the quote. So basically, take the money off the table. And I have to say, invariably, if I was in that position, that is what I would do. Take the money off the table, sit and wait. Discretion is the better part of valor. Yes, Henry IV, Part 1, something I studied at school, so I should know it. Goodness me. We've now got 1, 2, 3, 4, 5, 6 candles. So that's 12 minutes and building. If you were scaling into this, maybe you've got one contract running and you decided not to take it off, that's fine. You sit through this, and if it goes through 63.50 or above and away from this region, then you might decide to scale in, add another contract. You can either scale in or scale out. There are advantages and disadvantages to both methods. Volume under that last candle was in agreement, narrow spread, relatively low volume, so there's nothing particularly anomalous about that. See if we're going to have another push to the upside. Let's go up to the 15-second again. Back into blue. Volume's okay, certainly higher than, where was it? Well, those 3 candles. Oh, right over here. Here we are. So, we've got more buying support coming into the market. In terms of level to get in at, probably through 47, 48. Once we've cleared all this stuff now, we've got a ton of volatility coming back in again. Haven't got any news this afternoon that I'm aware of. And now traders will be doing the opposite. They'll be jumping in short on that one, because that's a nice move to the downside. And we're expecting the market to reverse back inside the spread of the candle again. More volatility. Volume's increased, as you can see here. Maybe it's going to move away this time. If it does move to the downside, we've got this pretty strong platform here and here at 63.32 odd. Just see if that gets tested. If it holds, see what happens. Quite interesting, as it's happening real time. It's been tested there. Right now we seem to have gone through it. We'll just see if that candle holds through it or not. Weakness to the upper side. We've got a wick here to the upper body. This platform here, it's being tested again. Went through marginally here, went back above it again. It's being tested again on this price action. Again, another wick to the upper body, took to the same level, 63.38. Tested that level again. Very strong this level now. If it does break through there, Then you've got a decent resistance, ceiling of resistance. It's jumped up now because it's been testing around this region. Volume's fallen away here on the up candles. Transition through to red. Not a lot of volume under that last one though. More selling under that one. Let's go up to the 2-minute. That's the level of resistance. You can see it there. Still holding. Starting to come off now. Now these people in here really will be suffering because they can see a move to the downside beginning to develop. See where we are on the 5-minute. And it's all quite frantic on the 15-second, so I'm not suggesting it's for everybody. It isn't. This is much more measured, much more even paced. But it gives you information on the 15-second or a 1-minute or a 2-minute, whatever it is, whatever your chosen time window is, then stick to that and just focus on those charts in close proximity. You can see here the fall away in the upwards buying volumes. We had the selling coming in on this candle, volumes falling away. No great surprise given the level here. Then we had the doji candle, indecision, not necessarily indicative of anything else. Another effort to rise, relatively low volume, in agreement, but nevertheless relatively low, but the volume's falling away. Now we've got an increase in selling volume coming in on this particular candle. No substantial wicks to top or bottom. And drop down onto the Renko. The trend dots have rolled, they've gone into red. We were in a transitional phase, we've gone through that transition, we're into red now, but the trend monitor here is still blue. Any questions, by the way, Lynn?
No, that's
you okay? Okay.
Actually, to be honest, everything's stalled.
Yeah, everything's stalled a little bit now. Let's just have a quick look at the see what's going on in terms of the currency indices.
If you go down to the YM, that's stalled. The S&P 500 stalled.
Okay, that's the dollar. And as always, if you're trading commodities, you've got to keep an eye on what the dollar is doing, the dollar index. Generally speaking, they work inversely, although not always. And of course, currencies when you're trading oil.
The Canadian's falling in 5 minutes.
Okay. Let's just have a quick look at the indices. That's on the daily. So we've recovered that particular volatility candle. We've now traded reversed straight off that higher, taking all that loss out, and we're now moving firmly higher. And all of this was triggered through concerns over China and the trade talks and everything else.
What have you got out there?
Sorry, Dan? I've got the YM, the ES, this is the Dow 30, I've got the ES center, and I've got the NQ on the right hand side, and then I've got the equivalent charts for the three of them on 5 minute down at the bottom here. Let's just let's have a look at the ES, for example. This is the start. This is when we get the surge in volume. We've got the cash and Globex open simultaneously. This is Globex volume only. This is 2:30 UK time. This is when the cash markets open up alongside. So we get the surge in volume. Propelled the markets nicely higher. Now we're starting to see a congestion phase building. And once that congestion phase builds, then it's a question of defining your levels where you would look for either a shorting opportunity or joining a longer opportunity to the upside. And the attenuation in volume that you see here is natural. You always get a peak in volume around the open. It's natural, and then the volume will start to fall away. So this is part and parcel of the fact that we've had a big market open. It's nothing more significant than that. And then gradually, as the market starts to settle, we're now an hour and a half in, you're back to reading the volume bars as you would in any other circumstance. And of course, the difference between trading oil and when you're trading indices, if you're trading indices, you've got three charts to look at. They may be similar, but they're not always identical, and they do tend to give clues, because sometimes you'll see something like the NQ will be leading. Maybe the YM's lagging a bit, but if the NQ is leading, it's got enough strength to pull the YM up. So, you know, if you've got a decent move on the NQ to the upside, as we've had in the past quite frequently, then it's you know, it's a comfortable way of trading the YM, because you're looking at the pull through from the NQ, and the same applies to the ES as well. And at that point, I think I will pass back to Anna, if I may.
Okay.
Yep. Just for a change of voice.
As I said, did you have the 10-minute chart up of yours? No, you didn't. Okay, well, this was the 10-minute chart, and I said the volatility candle came in. We had a lot of volume underneath it, and what tends to happen with the price into price, when you see volatility triggered, that means the price action is outside the average true range. It retreats to within the spread of the candle. Now, the following candle was an up candle. It did even have a wick to the bottom of the candle, but the volume on that is much lower than this one. With volatility candles, you do have this inrush of momentum and participation and volume. But at the moment, this is what we're seeing. We're seeing the price action retreat to within the spread of the candle. And moving back even further, if you like, we're talking about congestion. This was the break away from that congestion, followed by, you've got a reasonable volume under that one. Not a lot of volume under this one, but it's still carried on higher. This was a little red candle with the wick to the top of the candle just prior to this inrush of volume, which sort of really helped to propel it higher. And this is what you often see when you just have this sudden burst of activity in the price action accompanied with volume. But what I also wanted to say on the 30-minute chart, which was interesting, no volatility triggered here, but when we said we looked at the daily chart, because these are 24-hour markets now, back in the day when we traded, it was so much easier. Everything opened at the same time and closed at the same time. But with 24-hour markets, and you're looking at the daily chart, what is also might be interesting to have a look at is, we said it was it looked very bullish. It was a nice up candle. Where did the majority of that up move occur? Did it actually, you know, has it come about since the open, or actually has the move already, most of that move already happened? And you can easily pick it out, certainly on Ninja, as we can see here. Although the volume is, the actual participation volume is lower, as you would expect. This is when it was. This is when it rolled over. This is today. But you look from here to where we joined it, say at 2:30, when the physical, you know, the indices open, and most day traders, you know, come to their desks, as it were, and you look at where it was at this point and by how much it has gone up, as it were. That's a fairly big move, isn't it, David? That's actually, it looks like a drift higher, but in terms of you know, what happened to the candle, it actually went from where was it, 62, yeah, to 62.80, just under 63, and since then, so we've had lots and lots of participation, but we actually haven't moved that far, have we? So if you like, you know, this we have to kind of sort of recalibrate when we look at the charts on the daily time frame, because, as I said, because you're looking at a 24-hour window. You'll often hear, you'll often read, for example, especially on investing.com, oh, futures are expected to open higher, or futures are expected to open lower. That's because there's a degree of catch-up from what is happening on Globex. As I said, don't underestimate Globex. Just because there is, you know, there are fewer traders, if you like, trading the Globex market, it does still have a big impact on the price action. Is that anything you agree with that, David? Yeah, that's it. Fine, brilliant. Thank you so much. That's it. We're in terms of the charts, that's where we are coming to an end very, very quickly. Back to the actual indicators that we have been using. As I said, we had the price action and volume, but we had the volume point of control. These are from NinjaTrader. The ones that we use in day trade in this room is what we call our essentials package. It doesn't include the specific Forex ones, and the package, if you want details, you just click on NinjaTrader, Ninja Indicators here. This is the essential indicators, and the cost for the complete package is $749. If you click on the videos here, it will take you to the dedicated page for all the indicators, and you can catch up and just look at. And let me just put the VPOC. It's easier. That's not very interesting. There we are. They are all. I've gone through the wrong way. Hold on. Let's have a look. Sorry, I'm being very silly here. Right. We are using the essentials package. If you want to know more about the individual indicators, you just scroll down, and where are we? You know when you're looking for something quickly, David. Ah, there we are. We've got new pages on the site. There we are. Volume point of control. There we are. Those are all the videos for the indicator, just that indicator, with all the support pages, really to explain. As I said, it is an enhanced version of the volume at price, which is another volume indicator that a lot of traders like to use. All our products are backed by a 7-day money-back guarantee. You can buy one, you can buy a bundle, or as I said, you can buy the complete package. And there's also backed by 24/7 customer support. Anything else, David, you want to add to that? Lovely. I don't think there's any more questions. There we are. Brilliant. No, thank you so much for coming. We are coming along. We are back next week at the same time. As I said, if you've got anything that you know, a market that you want us to have a look, or stock, then just drop me an email, anna@annacooling.com, and we'll be more than happy to just go through it. And as there's always lessons, always VPA lessons to learn, price action lessons, volatility lessons, and we're more than happy to go through them. Is that okay, David? Lovely. Enjoy the rest of the trading day, the rest of the trading week. Have a great weekend, and we will see you next time.